This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on November the 8th, 2013. Our time is 8:48 in the morning Mountain. Our radio show runs on your favorite radio stations. The shows are archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com. You can stream them there. We have a podcast through iTunes. Go to iTunes. The show is portable. Type in World Financial Report on Radio. We go anywhere you do. Should mention that we have daily market commentary from Harold as well on his websites. You can find it on the podcast site as well. And we have a YouTube channel now, HES Radio. We'll give you more details on that in the weeks to come, but we have our own YouTube channel where we'll be giving you information in the future. Worldwide Precious Metals, they are putting on seminars in Edmonton, and it's about the Canadian banking system. We would like to thank everyone who phoned in and prearranged a seat, booked a seat. This is completely booked up. So for the November 18th and November 19th Canadian Banking System Seminar, it is completely full now. So if you're in Toronto, Edmonton, or Calgary, call Worldwide Precious Metals and get your name on the list for the seminars in 2014. They'll be having about the Canadian banking system. The shocking truth, you want to be a part of one of these seminars. 1-866-623-2002 or sign up online at wwpmc.com. And thanks to everyone that signed up in Edmonton. 2014 will bring more seminars in Calgary, Edmonton, and Toronto. Call Worldwide and get your name listed now for one of those much coveted seats. Jobs numbers came out in the United States this morning. They're cheerleading a great number. They believe it's a great number. Really, it's not, in my opinion. 204,000 jobs gained. The unemployment rate went up to 7.3. We'll get a chance, obviously, as they filter through the numbers to take a look exactly what's happening in the United States. As is the case in the past, a lot of these jobs are part-time. A lot of them are in the service sector with very low money attached to them. Also, one of the absurd things this week, Twitter. And yes, I'm on Twitter. You can follow me if you like, Randy_Marshall, and I will follow you back. I've had an account now for well over a year. But I will tell you, on Twitter, they did an IPO around $25, $26. And it's interesting because here we are the next day, it goes up to the mid-40s, almost touching 50 at some point. And a company that has zero earnings, and it's up almost 70-80% on the very first day. It's absolutely bizarre, some of the things that we're seeing in the stock market today. Good news on the diamonds front. We'll talk about diamonds later on in the show, but I can tell you, and we have some news regarding Harold's auction site, hsfineauctions.com. We'll talk about that later in the show, but next week we have that giant pink going for sale, approximately $60 million, and we have that orange possibly selling for $20 million. That will be next week. And Harold, we will talk about it next week on the show when the numbers finally come out. But stay tuned for that in the second half of the show. But this Twitter thing is very absurd to me, Harold, how you have a company with no earnings, and yet they do an IPO at 25, 26, goes up to almost 50. Obviously, it was mispriced, if you believe that. It just goes to show how crazy and unstable the stock market is again, similar to back in the crazy tech days.
You better believe it, Randy. Again, a lot of people are scratching their head over that. And again, at this particular point, what's going on Wall Street, I really don't think matters at this particular point because nobody really believes the numbers that are coming out. You know, a 7.3% unemployment rate is just a smokescreen. It really doesn't mean anything because the real numbers that you have to look at is the labor participation. How many people are actually working? And at this point, it's the lowest since 1978. It's at a 35-year low. It's at 62.8%. So that tells me that there's a 38% unemployment rate if you take into consideration the people that stopped looking for work. I mean, that number is worse than the Depression numbers back in the 1930s. So, again, you just can't believe any of the numbers that are coming out, because why in the world does the stock market rally today based on such poor numbers? Again, the lowest number since March of 1978. Those are horrendous numbers. So, again, I really don't put an awful lot of credence in that. I know that there's also reports in the newsletter this week where Bank of America is talking about one of the largest sell-offs in the private stock market that they've ever seen. So how in the world is the market going up when, on one hand, the unemployment number looks absolutely horrendous, and then on top of that, again, it just doesn't make an awful lot of sense at this point. And again, most of the general public is not in the stock market anyways. The middle class got so hammered in 2008 that they just never recovered from that. And again, it's just way too risky of a market. But all of the markets are crazy at this point here. It just doesn't make sense what's really happening in the markets at this point. You know, the unemployment numbers came out. They weren't good. That should have been bullish for gold. Gold is down $23 today. It's trading at $12.84 at this particular point, with very, very heavy support for gold at $12.80. So at $12.80, there's heavy support in the futures market. After that, you've got minor support at $12.50, and then the biggest support is at $11.80. Silver is similar. Silver's down 35 cents at $21.42. The low that we saw today so far is at $21.20. There's very, very heavy support in the $20.80 level. So again, the markets have been so boring and so lethargic, and even with everything that's happening in the markets, you would have thought that the bargain hunters would come in and buy this market, which they eventually will do. The fact is that gold and silver is just trading in a range, and it's been a boring last couple months because there's been no excitement in the markets whatsoever. There's a lot of prognosticators, a lot of analysts out there that are totally sold on gold, and then you have Wall Street that is totally against gold. So, you know, at this particular point, we're just going to have to sit back and let it, you know, work its way out. But right now it's holding support at $12.80. Again, I think that we have seen the markets, the bottom of the market when we saw gold in the $11.80 range, you know, back several months ago. So again, at this point here, gold's down $23, trading at $12.84. Silver's down 35 cents at $21.42 at this particular point. Platinum's down $14 at $14.43, and palladium's down $6 at $760. The Dow is up 85 points at 15,679. Nasdaq's up 42 points at 38.99. You've got the Toronto Stock Exchange up 40 points at 13,334. The U.S. dollar has rallied over the last week, which is one of the reasons why gold sold off. But again, when the dollar sells off, gold should be skyrocketing. So there's a direct correlation between gold and the U.S. dollar, and we're just not seeing it as accurately as we should be seeing it at this point. The U.S. dollar is trading at 81.37. The Nikkei is down 141 points at 14,086, and crude oil is even on the day at 94.20. The Canadian dollar is dropping with the U.S. dollar. It's trading right now at about the 95-cent level. So, again, Randy, at this particular point, the markets are like a head-scratcher. They don't make any sense whatsoever. There's so many companies out there that are not making any money. The economy in the United States is not very strong. But, again, when you're putting $85 billion a month into the market and into the bond market, you know, you're going to get markets that are stabilized, and the brokers are looking at it as extremely bullish when $85 billion is going into the market, and they've been taking advantage of that. But if you look at the individual stocks, there's only a handful of stocks that are doing extremely well. Most of the stock market is not doing well. So there's no doubt that we have the potential of another bubble, not only in the stock market, but also in the real estate market in the United States. There's certain areas of the United States where real estate has gone up 20% in a month. That's what got the U.S. into trouble back in 2007 and 8, and the same scenario is happening all over again. You're starting to get these bubbles in the stock market, and you're starting to get these bubbles in the real estate market, and that's exactly what happened in 2007 and 8, which caused the market to drop in half And again, we believe that something similar is about to happen. So now is the time to be very, very conservative. I know that the gold and silver markets have been very, very disappointing, but they are still trading in the range, and they have not broken out of that range, either on the upside or on the downside. So, again, we're coming close to the end of the year. We get into a few of the months now where the gold market is very bullish, so is silver, and we're hoping that that will continue to support the gold and silver market. Going into the first part of next year is when you could see the real fireworks happen, and we do believe that the first quarter of 2014 is not going to be a strong year for the economy, and we do think that that is a time when the stock market could sell off quite substantially. So, again, if you're a holder of hard assets, the most important thing right now, with all the fear that's in the marketplace, is to be able to keep your money, not to lose it in the market. The problem is that interest rates are so low that it forces people back into the riskier stock markets, and that's not where you want to have your money at this particular point. So again, with interest rates at 1 or 2%, and that's what you're getting out of the bank, that's obviously not a good return. And with inflation where it is, you're actually losing your money keeping it in the bank in that type of scenario. However, that will change because, again, what's happening in the United States and other parts of the world is to continue to print money, it has to reduce the value of the dollar. And by the dollar being reduced in value, it has got to push gold and silver prices higher. These are action-reaction markets, and a weak U.S. dollar is extremely bullish for gold. And consequently, a strong U.S. dollar is bearish for gold. Best example of that was the 90s. When gold was down at $250, because there was nobody trading gold at that point, and it was primarily because the U.S. dollar was one of the strongest currencies at that time. So, again, we will return to those times, there's no doubt about it, and it's only a matter of time until the U.S. dollar breaks down below its next support level, which is at 78.5 cents. When that does happen, we should see gold really start to break out. And in 2011, when gold hit 1,920, the highest price of all time, it was because the U.S. dollar was trading at 72.5 cents. So, again, at this point, the markets have been boring. There's no doubt about that. We need to see something happen in the market. And the thing that I believe will propel the gold market substantially higher is the weakness in the U.S. dollar. And there's no way in the world that that is not going to happen. There's no way that they can strengthen the U.S. dollar without raising interest rates, and we know that that's not going to happen. They're not going to raise interest rates because they're afraid of the stock market falling, they're afraid of the real estate market dropping, and by raising interest rates, it will destroy the bond market. So, again, it's not easy to get out of the problems that the U.S. is sitting at this particular point, Randy. So, again, I'm firm in my understanding of why these markets do what they do. I do believe that the government is so desperate at this particular point that certain things are being done in the market to try to convey a situation where the markets are stabilizing and where the U.S. economy is actually getting stronger. It isn't getting stronger because you've got such a huge amount of people out of work. And all of the money that was put back into the system, all of those trillions and trillions of dollars from 2008 that was put back into the system as far as quantitative easing, that was supposed to be to get people working again, to get businesses back on track, and that's how the economy was going to do better. And obviously by more people working, then they're paying taxes, and then the government does better. With the unbelievable labor participation numbers of 62.8%, it tells me that over 30% of the U.S. population is not working, and they're not paying taxes, and that does not benefit the economy in any way. So, again, they can fool with the numbers all that they want, but eventually the markets are going to do what they were supposed to do. There are short-term trades, which is trends that we tend to be going through now, where they're basically manipulating certain markets, and then there's a long-term trend that will kick back in, and the markets will do what they're supposed to do, and they'll catch up. And that's why we still believe that not only will gold break the $1,920 high that we saw in 2011, but I also still firmly believe that we'll see gold break 2,000 and 2,200, and I also believe that gold will eventually trade between $3,000 and $5,000. I know it sounds crazy at this point because gold is so lethargic, but again, every market has its time, and the reason why gold and silver have been so bullish over the past 10 years is still very present in the market. The only thing that has hurt the gold and silver market is the suppression by the banks and the government that tried to show that gold is not a viable investment at this point. I don't want to sound like a crybaby in any way, shape, or form. Again, I put my money up the same way as everybody else did. I'm a firm believer in gold and silver and hard assets, and I put my money up every single day. I've got thousands of ounces of gold personally, and I have not sold any of it. And I've got hundreds of thousands of ounces of silver personally, and I have not sold that either. So basically, why would I recommend to the listeners of our show, the people that we care the most about, to do something that I'm not doing myself? I'm a firm believer that you need to hold hard assets in this type of an economy because this is not a good economy. This is not your economy that you can bank on your future. You've got to be petrified every day if your money is sitting in the paper asset market. So again, every market has its time, and our market will come. We are in a 10, 11-year bull market in gold and silver, and we saw gigantic returns from $250 to $1,900, from $4 silver all the way up to $50 silver, from $18 oil all the way up to $150. From 87 in the euro all the way up to 170. We made a lot of money in the markets over the last 10 years, and again, the last 2 years have been boring and frustrating and downright maddening to see that the government can get away with basically the criminal activities that they're involved in at this point. And again, I'm not a baby that cries about the markets. We take our lumps, we make our money, and if we lose our money, we take our lumps like big boys. But the fact is that this market should not be sitting like it's sitting right now because the fundamentals for the gold market have not changed that much that the market should have gone from $1,900 to $1,300. So again, I'm a firm believer in gold and silver and in diamonds and in hard assets, and that's where most of my money is invested, and I wouldn't change a thing at this time. So, Randy, that's the way I'm seeing things, and again, I'm firmly convinced that over the longer term, again, that we will see this market not only come back to 1900, but come back and make new highs and go on to make everybody wealthy again in this market.
I agree with you, and a lot of people have made quite a substantial amount of money already, and the belief is that the best is yet to come. If you logically take a look at what's happening in the United States, the money printing that is happening is astonishing. Now, on a day like today, because of one good jobs number, which they believe is good, although we would debate that as the unemployment rate went up and the participation rate is at an all-time high, people not participating in the job market, which is not good, they believe that quantitative easing will be tapered. Right now, they're putting in about $85 billion a month. Janet Yellen will be the new head of the Fed when Ben Bernanke retires in 2014. She is even more dovish than Ben Bernanke. The money printing will continue. I find it very hard to believe that they will taper. A lot of experts actually believe that there won't be tapering. They will be adding to quantitative easing. We get into 2014. We have the debt ceiling issue. We also have the funding of the government issue because they kick that can down the road. The United States has massive, massive deficit and debt problems that are not being dealt with. All you have to do is watch any of the television programs on CNN or even Fox News or MSNBC, and they all say we need to work together to solve our problems. The problem is both sides believe they're right, and both of their bases are saying, stick to your guns. We support you. So there's really no reason for people to reach across the aisle in the United States and work together because they're getting support from their bases to stay the course and win the battle. The battle, though, is saving the United States from bankruptcy. And some people believe the United States, factoring in Medicaid, Medicare, and all the entitlement programs, Social Security that they have in the United States. Obviously, Obamacare is another one, too. We'll have to wait and see how that plays out. They're in debt $200 trillion, according to Lawrence Klotnikoff, who is a professor in the United States. a massive amount of money. That's why we believe in hard assets. This is a long-term gain. This is not a short-term investment prospect. This is a long-term game that you need to look out over the horizon, have patience, know you've got that insurance policy in your portfolio, and believe that given time, we will be correct as we have in the past. Harold started doing the show in 2001. I joined him in February of 2002. And we have made some outstanding calls on this show. Harold has done amazing things. People have made a lot of money. Now the time is to stay the course, be patient, continue holding your positions, know that you've got that insurance policy in your portfolio, because the truth is the United States had one financial crisis, the world did. Nothing has really changed. We could have it happen again. You need that insurance policy in your portfolio. If you look at what's happening in Europe, they lowered their interest rate because they're concerned about deflation. They're also concerned about their job numbers. Things are not good around the world financially or even geopolitically. And everyone seems to be spying on everyone, too. It's a very crazy time. That's why we're advocating gold, silver, also platinum, palladium, diamonds. Speak with Worldwide Precious Metals. This is the company Harold recommends you use, a Canadian company out of Vancouver. Harold has recommended them for over 10 years. They're the experts to trust and work with in this very specialized market. Start your own precious metals investment account today. All gold is allocated either wholesale or premium. Worldwide is there to help you maximize the profit, minimize the risk. You will have instant liquidity in and out of the market with just a phone call, 24/7 online access. The metal can be stored on your behalf, insured to the full value of your investment. Ask about domestic or foreign storage and premium storage in specific coin and bar form. Stored metal is outside the banking system, which is so important. The metal can also be delivered to your door. Worldwide has access worldwide to the physical precious metals that you need. And when we talk about having it out of the banking system, bank depositors in Cyprus lost 47.5% of their money. Could a bail-in happen in Canada? That seminar took place in Toronto. It's going to happen here in Edmonton. And in 2014, they will do it in Calgary, Edmonton, and Toronto again. If you would like to get your name on the list now for 2014, connect with Worldwide Precious Metals, wwpmc.com, wwpmc.com. The telephone number 1-866-623-2002, 1-866-623-2002. The website, wwpmc.com. Going to come back and talk about diamonds. Next week will be a monster week for diamonds. We have that big pink diamond for sale. We have an orange diamond for sale. Christie's and Sotheby's with sales in Geneva, Switzerland. We'll talk about that and Harold's website, HS Fine Auctions 2, is the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on November the 8th, 2013. Our time is 9:16 Mountain. We can't forget that it's Remembrance Day, and for some it will be a long weekend, and we do remember those that served our country so bravely. And those that passed and those that didn't, that are still with us, we thank you for your service. In the United States, it's Veterans Day. Here in Canada, it's Remembrance Day. The CFR is in Edmonton, so to all the cowboys and cowgirls in town, also Farm Fair. Busy weekend here in Edmonton with Farm Fair and the CFR. We say hello to all the folks over at Northlands. We're taping our show here, as I mentioned, on November the 8th. Our radio show runs on your favorite radio station. As well, we're archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com. You can stream the shows there. We have a podcast. Now, the podcast, all you need to do is type in World Financial Report on radio in iTunes. It will take you there. Our radio show is portable. It goes anywhere you do. Keep that in mind. When it comes to investing in gold, silver, platinum, palladium, there's only one company Harold recommends you use. That is Worldwide Precious Metals. Their telephone number, 1-866-623-2002. The website, wwpmc.com. Harold's website's rarecoloreddiamonds.com for diamonds and hsfineauctions.com for auctions. We had an auction recently which was a massive success. Harold went on Bloomberg and spoke with Carol Masser about the auction. It was a big success. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. And our featured diamond this week is a 0.58 carat emerald cut fancy intense purplish pink argyle. This coming week, we have the biggest orange diamond ever to fetch $20 million at auction. We also have in Geneva the following day a vivid pink diamond valued at $60 million. So we will have those two items to keep an eye on next week. We will let you know how that goes. One thing I wanted to bring up here, Harold, that I think is very critical as we're taping our show here at the beginning of November. Christmas is approximately about a month and a half away. So for those that wanted to get diamonds, have them put in jewelry for loved ones for Christmas, now is the time to speak to you. And if you have not seen even some of the diamond rings that Harold has on offer right now at rarecoloreddiamonds.com, go there. But Harold, in the past, we have made diamond rings for people that have simply been amazing, stunning pieces of artwork. And for those that are looking for a Christmas gift that includes a diamond, a colored diamond, it's a must to speak to you this time of year.
Well, thank you, Randy. Yes, we still have a little bit of time, but to make a ring takes almost a month. And the fact is that these are museum quality pieces, so it's not something that you necessarily want to rush. But if that was the case and you did need something for the holidays, I'm sure we still have time to get that done. The diamond market is just on fire right now with all the uncertainty around the world and everything going on in Europe, here in the United States and all that. The fact is that diamonds are just selling for fortunes. And these are assets that never decline in value because there's so few of them. Individual diamonds like the one that we have as a featured diamond this week, you'll never see another diamond like that. It's a spectacular diamond, and it's a very high clarity grade. The color is amazing. The cut is amazing. And soon that mine is going to close, and there won't be any more of those diamonds. So, again, I've been in business 35 years. I've seen almost everything happen in the financial markets, and at this particular point, where preservation of capital is one of the most important things, and as we talked about earlier in the show, with interest rates, paying 1 or 2% in the bank, which forces people into a much riskier stock market to see if they could maybe get a 5 or 6% return on their money. There are certain diamonds that go up by 10, 15, 20% a year and never decline in value. So, again, one of the reasons that we've been on Bloomberg so many times is because of the alternative market, alternatives to stocks and bonds, which are very, very risky at this particular point. So in order to get through difficult times, you definitely want to be diversified, and there's definitely a tremendous need for an asset like a diamond. Now, if you look at Christie's and Sotheby's, the two major auction houses in the world, they mostly auction off some of the world's rarest diamonds. But there is a huge market for diamonds that are not multi-million-dollar diamonds. And that's what we do. Even though we do have some of those multi-million-dollar, $30 million diamonds, that's not what most of our clients buy. Most of our clients invest in diamonds between $15,000, $20,000, $50,000 to $100,000 type of thing. We have diamonds that, investment quality diamonds, that have track records that start at the $15,000 level, and we have diamonds that go up all the way to the $30, $40, $50 million level. 2 weeks ago, there was a 118-carat deep flawless oval diamond sold for just over $30 million. We have two diamonds that are over 100 carats that are in that same price range that are equally as rare. We have some pink diamonds and blue diamonds and green diamonds that you just wouldn't believe exist today. But that is not what most of our clients invest in. Most of our clients invest in reasonably priced diamonds that have strong track records. In fact, last week when we talked about the auction results from Christie's last major auction, the 118 karat D flawless sold for what they estimated it would sell for, and other major big diamonds sold for very close to what the estimates were. It was the lesser priced diamonds, the type of diamonds that we're talking about today, that went up 300-400% over what they anticipated they would sell for. The diamonds that were, supposed to sell for 15, 20,000, that sold for 30, 40, 50,000. Those are the diamonds that we offer, and those are the diamonds that we're talking about our clients investing in. To give you an example, back in 1980, you could have bought a 1 carat fancy yellow flawless diamond for about $500. Today, they're $20,000 to $25,000. The longer you hold on to those diamonds, the more and more they go up. Over the last 10 years, I've had a 2 carat vivid pink diamond that I bought for $350,000, and now that diamond's worth upwards of $4 million. So what happens in the diamond market is that in a lot of cases, families will invest in diamonds and then pass them down from generation to generation. That's how you get, a $100,000 diamond that eventually sells, for $3, $4, $5 million. That happens in the diamond business, but they are not short-term investments. Just so you know, you don't buy a diamond and plan on selling it a year or 2 years from now. There are some firms in Toronto that offer that type of program, but again, as long as I've been in the diamond business, I don't know anybody that could sell a diamond and make a profit in a couple months type of thing, or even, in a year or 2. It's something that you want to put away for the longer term, like you would a retirement savings plan. If you put money into an RSP, you're going to put it away for 10 or 20 years, and that's what you do with a diamond. Give it a chance to go up in value. Give it a chance to have a supply and demand issue, and that's exactly what we're looking at right now. We offer the type of diamonds that are extremely rare and in very tight supplies, and what we try to do is bring the type of diamonds to our clients that are reasonably priced now, but in 10, 15 years from now are going to be worth a fortune. That's why a lot of our clients buy diamonds for their children and grandchildren, to put them away for the next 10, 20, 30 years. With my 3 young grandchildren, they've got diamonds put away, yellow flawlesses and argyle pinks, but they're 9, 7, and 1.5 now. So when they get to be 28, 30 years old and they're ready to get and make their mark in this world, they're going to have an asset that is worth an awful lot of money that will give them an opportunity to get a good start in this world. If you were to put $20,000 into a yellow flawless diamond and $20,000 into a mutual fund, in 10 years your yellow flawless will be worth about $75,000, $80,000. Who knows what your stock would be worth. So my recommendations at this point is to diversify, get something into the type of asset that nobody knows that you own, a portable private asset that if you needed to can go anywhere with you undetected. Now, we recommend, even though, again, I mentioned before, we carry diamonds, the rarest diamonds in the world. Some of the diamonds in my collection are beyond rare. In fact, we have a collection that's worth about $500 million. And these diamonds never, ever go down in value because they're not traded on exchanges like stocks are and commodities are. These are private sales. So we sell our clients' diamonds and our own diamonds in 2 ways. One is with our company, Rare Colored Diamonds, which most of our clients buy their diamonds through. RareColoredDiamonds.com is a company that is an investment firm that deals only in investment quality diamonds. And again, we carry diamonds starting at $15,000, and those $15,000 to $20,000 diamonds will increase by 15% a year every year. The only time that they did better than that was actually in 1980 when there was high inflation, and these diamonds went up 500% in 2 years. So again, these are assets that you need to own. These are assets that if you put them away in your safety deposit box and forget about them, you're going to find that we're going to sell those diamonds for you for a substantial return down the road. We own another company called 8 Siegel Fine Auctions, and it's the only company of its kind, and we built that for our clients to resell their diamonds. We get 10% of the profit, you get all the rest. If you bought an argyle pink diamond for $100,000 and we sold it for $1 million and you made a $900,000 profit over the next 10, 15 years, we'd get $90,000 and you would get all the rest. So again, this is what we do. We deal exclusively in the colored diamond and rare diamond market that are investment quality diamonds. We carry red diamonds, which are the rarest diamonds in the world. They sell for $3 to $4 million a carat. We carry blue diamonds, which recently, in the past 7 or 8 years have gone from $200,000 a carat to $2 million a carat because the mine that produced these blues had closed down. Now the exact same situation is happening with pink diamonds. So if you learn from history, history repeats itself. In 2005, when a very famous mine closed in South Africa that produced blue diamonds, by 2005, you could have bought a vivid blue diamond for $200,000 a carat. Now, fast forward to 2013, they're close to $2 million or more a carat. They went up 1,000%. Now we've got the mine in Western Australia, the Argyle mine, which is going to close in 6 years. The price of these pink diamonds will do the same as blue diamonds did. They will absolutely skyrocket in price. They're probably the best investments that you could make at this particular time, because we know that this Argyle mine produces 95% of the pink diamonds in the world, and soon there will be no more because this mine is going to close down. These Argyle diamonds are world famous for the Argyle tender, where the top 55 to 65 diamonds are taken on tour by Argyle to 6 cities around the world where they're shown to very high-end jewelers and dealers. This year, every diamond sold at the tender, and they sold for 40% more than they did last year. 40% more in 1 year. When you talk about an investment, again, making 1 or 2% in the bank, or maybe making 4 or 5% in the Dow with taking gigantic risks, here's an asset that went up 40% in 1 year if you were one of the lucky few to have ever gotten one of those Argyle tender diamonds. And we do have those diamonds. We have some of them put away that absolutely defy description. Now, you can get involved in Argyle pink diamonds through us, through rarecoloreddiamonds.com. You go to rarecoloreddiamonds.com, go to the loose diamond section, and look at our pink diamonds. You're going to see fancy pink, fancy intense pink, fancy deep pink, and best of all, fancy vivid pink. Those fancy vivid pink diamonds increase by 50%, 40 to 50%, over a couple of years. In fact, they doubled in price in 2.5 years. That's how strong those investments are. When you buy the best possible assets, they go up more than any other assets. And again, because this mine is going to close down, there's not going to be any more of these diamonds. They are the most concentrated form of wealth in the world. So we very strongly recommend that you invest in yellow flawless diamonds through us, because we have the highest quality, the best colors, and we're the only company that can resell them for you. Then on top of that, we have the largest supply of Argyle pink diamonds. As I mentioned earlier in the show, I always put my money where my mouth is. If I'm recommending to you to buy physical gold and silver, you can bet your bottom dollar that I own physical gold and silver. When I recommend yellow flawless and Argyle pink diamonds, it's because I also own those myself, and these are amongst the best investments you could make. We carry reds, we carry blues, we carry green diamonds, some of the rarest green diamonds in the world. We carry orange diamonds from time to time. They're ridiculously rare. The rarest white diamonds in the world are D-flawless whites. I brought those to you several years ago. They do nothing but go up in price. They actually increase by 15 to 20% a year, are negative correlated to the stock market. So if the Dow in January or February drops by 30 or 40%, these diamonds will go up by 30 or 40%. They're amongst the best investment diamonds you can buy. They're perfect white diamonds, and they're 10 times the price of a normal white diamond. That's how valuable these diamonds are. So, again, at this point here, Randy, we've got some huge diamonds coming up for sale at coming auctions. One is that vivid orange, which is one of the rarest diamonds in the world. And let's face it, the rarest diamond in the world is that 60-carat vivid pink flawless diamond that they say will sell for $60 million, but it could easily sell for $90 to $100 million. There's not another diamond in existence that compares to that diamond. So, again, there's a reason why these type of diamonds come up for sale, and there's a reason why they fetch these type of returns. They're one of the best investments you could ever make, especially with the uncertainty that's in the world markets today, Randy. So I've never been more excited about the markets now. The diamond markets are on fire. They're hitting records every single time they go to auction, and yellow flawless diamonds, or big yellow diamonds, are also setting records at auctions. I've never been more pleased with the results that we're seeing, not only at Christie's and Sotheby's, but our own auctions, in which at our last auction on October the 21st, we sold every single diamond, $500,000 worth of diamonds 1 hour. It's never, ever been done before. It's something I'm extremely proud of, and we're the only company that has that.
This week's featured diamond. Speak with Harold personally and privately at rarecoloreddiamonds.com or 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com. Featured diamond, a 0.58 carat emerald cut, fancy, intense, purplish pink Argyle. As we said on the last show, at some point, the Argyle mine that produces all the pinks here in the next 5 to 6, 7 years will be depleted. That means 90 to 95% of the world's pinks completely gone. Then at that point, you're paying into the aftermarket amounts that we don't even have a clue where these diamonds can go. Harold's auction website is H. Siegel Fine Auctions, hsfineauctions.com. And one of the things that Harold did to improve the website and the auctions, and there was a press release that came out this week, HS Fine Auctions proud to launch a new web feature to its already innovative online auctioning platform, allowing potential bidders from all over the world to log in prior to an auction and set a maximum bid for each lot. Investors are invited to view available catalogs and set up their profile at hsfineauctions.com. Harold, you decided to do that to bring even more people into the auction site, and it's a very exciting new feature that you've done.
Well, thank you very much. Actually, I got to give credit to my son Jonathan for that. He's the one that thought of it and worked with Relentless Technologies in Vancouver that builds all of our websites and built this amazing feature. What it now will allow people in China and Australia, if we're holding an auction here in Canada and the United States, let's say at 8 o'clock Eastern Time, and obviously in Australia and in China and other parts of the world, it's not possible for people to be up at that particular point to attend, they could literally attend the auction and put in bids prior to the auction starting. So it's an amazing new feature. We're very proud of it, and we're always improving our business. The auction business is the future of the diamond business, and again, how can a diamond be a good investment if it can't be resold? If you buy a diamond through a jeweler, you'll never resell that diamond. First of all, you're paying way too much for it because they're retailers. Number two, they don't have the wherewithal to resell it. So you could hold on to a diamond ring or something that you bought from your jeweler, wear it for a few years, take it back to them and say, I'd like to resell this, and you're going to get less than what you paid for it. That's not going to happen with us. We built the secondary market that resells these diamonds. So we own H. Siegel Fine Auctions. It's the only company of its kind. It's getting tremendous publicity and press because it is the future of the diamond business, and it's something that I'm extremely proud of. In fact, I think it's our biggest contribution to the diamond business. So if you are dealing with other companies, and there are other companies out there that are in the diamond business, make certain that you're going to be able to or they're going to be able to resell that diamond for you. I can pretty well assure you that it isn't possible with other companies. We have a huge clientele all over the world and a huge following. Don't forget, we've been on the radio, for close to 20 years. So we have this huge following of people that have done very well with us, and that's why it was easier for us to start our auction business. Without clients, it's very difficult to do an auction. And as far as the auction business goes, our clients are not selling their diamonds right now. It's really myself that is putting up some of my personal diamonds because nobody's selling right now. Everybody's buying. Why would a client want to sell an Argyle pink diamond when it's only 6 years till the mine closes down and you're going to get 8 to 10 times your money back? So again, our future is in the auction business. We built H. Siegel Fine Auctions. It's all over the world now. Everybody knows who we are, and we're getting tremendous press, and I've never been more proud of something that we built, like rarecoloreddiamonds.com and H. Siegel Fine Auctions.
And Harold was on Bloomberg twice, once interviewed by Deirdre Bolton and the other time by Carol Masser. We have those interviews. You can see them at rarecoloreddiamonds.com. If you would like to get links to them, we'll be happy to send them out to you. Harold was on Bloomberg Television, the TV show, the specific program on Bloomberg, Money Moves. And both times Harold was on, he had Liz Taylor jewelry, and both ladies had the jewelry around their neck and the look on their face. Both cases, absolutely priceless. Featured diamond of the week, 0.58 carat emerald cut, fancy intense, purplish pink argyle. Speak with Harold at rarecoloreddiamonds.com about that, 1-800-432-1022. When it comes to investing in gold, silver, platinum, palladium, there's only one company Harold recommends you use, that is Worldwide Precious Metals. Their telephone number, 1-866-623-2002. Their website, wwpmc.com. They put on recently in Toronto a seminar, could a bank bail-in happen in Canada? Bank depositors lost 47.5% of their money in Cyprus. And the shocking truth of the Canadian banking system was revealed in Toronto. It will be revealed Monday, November the 18th and 19th in Edmonton. Those spots for the seminar completely taken, booked up. We'd like to thank everyone in Edmonton for obviously signing up and being a part of the seminar coming up here in the weeks to come. For those that missed out, we will have seminars in 2014 in Calgary, Edmonton, and Toronto. If you would like to get your name on the list now for the banking seminar, speak with Worldwide Precious Metals, wwpmc.com, or call them at 1-866-623-2002, 1-866-623-2002. And an interesting bit of information this week from Ron Rosen. He says, for the silver bulls, all I can tell you is silver can be hell on buy and hold investors, because you have to endure gut-wrenching corrections like we've seen for the past 2 years. But for those who can hang on, silver is headed into the stratosphere along with gold. I'm 82 years old now, and for the benefit of those worldwide, I can promise you this is going to be one of the greatest bull markets in history before it is over. To hell with the Dow, the NASDAQ, and the S&P at this point. Let the gamblers at the casino trade those. But he is very, very bullish on silver. And he believes that the bottom line is investors who are not invested in hard assets, such as gold and silver, will be facing a wipeout much worse than the world witnessed in 1970. John Embry from Sprout Asset Management, he came out and spoke about owning physical gold and silver. He says, anything I say about gold, I am extremely bullish on gold, but you can double that for silver. The simple fact is, silver is materially a smaller market than gold, so any significant amount of money hitting it will have more of an outsized impact. Besides that, silver has a much smaller above-ground inventory, and very significant portion of what is being dug up out of the ground is being consumed in industrial uses. So when this thing really gets going, the silver price is going to explode. Speak with Worldwide Precious Metals about investing in gold, silver, platinum, palladium. wwpmc.com, 1-866-623-2002. And Harold, with about 30 seconds left here, we can't urge people enough. Go to rarecoloreddiamonds.com, take a look at the featured diamond, go and look at our auction site and learn about that, and we will announce the next auction in the weeks to come. But it is an exciting time for hard assets.
It certainly is. Again, don't get confused and upset over what's happening in the commodities markets at this point here. Again, it's an act of desperation. But the hard asset market is on fire. It's all over the news, and that's what we bring to you. It's one of the best investments you could possibly make. I want to wish everybody a wonderful Remembrance Day. Again, it's extremely important that we remember those that fought for our country and gave us the freedom that we deserve and that we love today. So, again, have a wonderful long weekend, and I wish everybody a very profitable day.
Thank you very much, Harold Siegel, for your knowledge and another great show. And yes, I echo Harold's sentiments. We do remember on Remembrance Day all those that sacrificed and continue to serve our great country, Canada. The United States, they like to say that they're the greatest country in the world, but we know the truth in Canada. We are obviously one of the greatest countries in the world. Connect with Worldwide Precious Metals, www.pmc.com, 1-866-623-2002, rarecoloreddiamonds.com, telephone number 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.